What's up, you guys? Welcome back to the channel. Today's video is going to cover two things that could potentially be catalysts for NIO and could possibly affect their share price pretty substantially over the next couple of trading days. But before we actually jump into the video, for those of you who are new here, my name is Evan and I make videos that show you guys different ways of making money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, while you guys are down there, if you wouldn't mind hitting the like button, I would really appreciate it. And it really helps out the channel and it lets me know that you guys enjoy these video updates every day. So again, I'd really appreciate anybody who hits the like button. Now, taking a look at where NIO's trading today, they're actually up substantially on the day and they're up almost 13%, trading at about 20.25 right now. As you guys know, if you've been following NIO, they've actually pulled back pretty substantially over the past few months. And so to see these rare green days, I think it brings back some of that trust that's been lost over the past few months for different NIO investors because they've just been seeing their portfolio take hit after hit. So to see these green days, especially a 13% increase, I think that helps with the mindset of people who are invested in NIO. Now, when we look at the 5-day chart, this is where you can see how NIO actually recovered pretty nicely because just yesterday they actually hit a low of 1770, which we haven't seen for quite a long time. Now, I think with them trading at about 20.25 right now, the next resistance point is going to be anywhere from that $20.50 range up to the $21 range. Now, that's only a short-term resistance. Once they get past that, I think they can start climbing again. But just today, we already saw them testing that $20.50 range. I think they got up to about $20.46, and that was their high on the day. And now we're coming up towards the end of the market here in the next hour or so. And I don't think NIO is really going to shoot up too much more today, seeing as though they're up about 13% already. But I think this is a good day for NIO, and it begs the question of whether NIO at this price point is worth buying right now. With them being down nearly 30% on the month and nearly 50% year to date, NIO at this discount is something that you don't want to ignore, especially if you've considered buying into NIO in the past. Personally, I don't think there could be a better time. Now, you guys know that I'm not a financial advisor, and I've said that many times before. But with the way we've seen the EV industry suffering, especially since the start of this year, and pretty much the entire market has been taking a hit recently. Now, of course, that's due to many factors, but some of the big things are inflation, what's happening over in Europe, as well as different shortages in the auto industry. There's been a chip shortage that's been going on for about 2 years now, and this has been happening since the start of the pandemic. So if there were ever a time to look into buying EV stocks, or specifically NIO stock, I think now would be a good time to start doing a lot of research and see if this is a stock you'd want to hold long term. But despite everything that's happening right now and all these stocks that are taking a hit, NIO is actually looking up because their delivery numbers for February were actually up almost 10% year over year, and they delivered 6,131 vehicles in the month of February. And then sales in the first 2 months of the year were up 23% compared to the same period last year. And I don't think many people would argue with the fact that if everything that's happening right now around the world wasn't happening, NIO would be posting bigger numbers in terms of deliveries per month. And I think a lot more people would be invested in this stock and we wouldn't have seen them pull back so drastically. Now, that is a benefit though if you haven't bought into NIO, or maybe you even have bought into NIO and you just want to bring down your average cost. Now could be a time to consider buying in more shares or establishing an initial position in the stock. Now, one thing I did mention in yesterday's video, if you guys didn't see that video, was that February's delivery numbers for NIO are typically lower than other months because there's two things that are affecting their delivery numbers in February. This is usually around the time of the Chinese New Year, and typically a lot of different businesses shut down so people can celebrate the New Year, and this is about a 1 to 2 week event. And I don't know the details specifically towards NIO and whether they shut down completely, but I do know that they put out lower numbers in February for the past couple of years as compared to January and the previous months, as well as compared to the months after. And then another thing is that February is always shorter and it's the shortest month out of any month. There's 10% less days compared to a normal month. So it's not surprising to see them put out 10 or even 15% less vehicles as compared to January. And all things considered, NIO actually delivered over 25,000 vehicles during the fourth quarter of last year, and they only came up short by 500 vehicles from the highest estimated range that was put out before the quarter numbers were posted. And now it's looking like NIO is actually going to try tackling the lower end of the market with the launch of a sub-brand, and with an annual capacity of 60,000 units, NIO plans to give some lower-end automotive manufacturers a run for their money, while they previously primarily targeted the premium market, which is pretty smart considering the fast adoption of EVs in this segment. But for them to possibly start expanding into this lower-end market and making more affordable vehicles, I think that's going to start expanding their business, and I think that's going to get more people on board with NIO, especially people who maybe hadn't even looked into EVs prior. So as I mentioned a couple minutes ago, one of the things that could be a catalyst for NIO tomorrow is actually them listing on the Hong Kong Stock Exchange. If you guys aren't aware or you haven't really been keeping up with NIO, there's constantly been delisting fears that have raised interesting questions around NIO stock and whether they're going to stay on the New York Stock Exchange. There's always been this slight fear in the back of investors' minds, thinking that these Chinese stocks could be delisted, and it's because we've seen it in the past. And if you guys know about Didi, they're basically like the Uber of China, and they're planning to delist from the New York Stock Exchange, and they're going to be moving just to the Hong Kong Stock Exchange instead. Now NIO, on the other hand, they want to stay on both exchanges, and they're doing this to sort of create a safety net for their business. Right now, a lot of the funding for NIO, aside from what the government gave NIO to stay afloat about a year ago, most of their money has come from US investors. And so with it being a persistent threat that they could be delisted at some point, they want to broaden where their investors are from so they're not just isolated to one country, to where they could possibly be delisted in the future at some point. So NIO plans to list their shares on the Hong Kong Stock Exchange on March 10th, which is tomorrow, at the time of posting this video, and they recently received approval to list their shares by introduction. This basically means that they won't have to issue any new shares or raise funds in order to do so. And both Li Auto and XPeng have also listed their shares in Hong Kong, and these companies are both EV manufacturers just like NIO, and they both originated from China as well. Now I think for the most part, NIO is going to continue to trade primarily on the New York Stock Exchange, but their Hong Kong shares are going to begin trading tomorrow, and they've also applied for a similar secondary listing in Singapore. Now the reason why I said this could possibly be a catalyst is because we're not really sure how the market's going to react tomorrow when they're actually listed in Hong Kong. Personally, I think that it's a good thing, and I think that it shows investors that NIO is not putting all their eggs in one basket. They want to broaden where their investors are from, so I would think that investors would react positively to that news. But you really never know with how the market's been reacting lately. There's been multiple times where there's been positive news put out for different EV stocks, and then we've seen their share price tank the next day. So it's not very easy to say how NIO is going to trade tomorrow. But there is one main reason that I think the market could react negatively to, and this is the fact that NIO has been listed in the US market, and they've utilized US capital and US investors to fund a significant portion of their growth early on. Now, if for some reason they were to delist from US exchanges, I don't think that would bode well for US sales if they were ever to expand to the US. And I think that a lot of people are figuring that at some point NIO is going to expand to the US. It's just a matter of time. So if investors are figuring that they're expanding into Hong Kong onto their exchanges, and then at some point they're going to delist from US exchanges, that's something that investors are going to take into consideration tomorrow when they do list and when we see them on the Hong Kong Stock Exchange. Now, one other thing that could be a catalyst for NIO tomorrow and could affect their share price either in the green or the red is the fact that Rivian is going to report fourth quarter and full year 2021 results late on Thursday. Now, the reason why I say they could be in the green or the red is because other stocks that have reported earnings lately, which include Lucid, as well as NIO's numbers coming out for February, both things were not viewed as positive to the market. And so if Rivian's numbers don't exceed expectations, I think that's going to take a hit on a lot of smaller EV companies. Right now, according to Zacks Investment Research, analysts expect Rivian to trim losses from the last quarter to $1.58 per share on sales of $50.38 million. And Rivian did report a little revenue in Q3, but they have pretty steep losses, and sales came in around $1 million, and losses were $12.21 per share. And there's a lot of analysts that have become a lot more conservative on Rivian, and they're figuring that the numbers are going to be slightly lower than were previously predicted. Now, this could already be factored into all these EV companies' share prices, but I wouldn't be surprised if we see NIO react negatively, especially if Rivian's numbers don't exceed expectations. Now, if they do, I think we could see NIO share price shoot up, and I think we could see them continue on this uptrend that they've just started today. So I think tomorrow and through the end of this week in terms of trading, NIO's share price is really going to depend on how the Hong Kong listing goes and how investors react to that, as well as Rivian's fourth quarter results and whether those are positive or negative. Now, for those of you who made it this far into the video, let me know down in the comments what you think is going to happen with NIO's share price, as well as through the end of this week. Do you think they're going to trade flat, or do you think they're going to be in the positive or the negative by the end of this week? Also, if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one.